What happens when one of America's biggest healthcare insurers suddenly admits its numbers were way off? In just 24 hours, Centene's stock went from steady to freefall, wiping out billions in value and leaving investors stunned. On July the 1st, Centene, a company serving millions through Medicaid and ACA plans, did something rarely seen in corporate America. It withdrew its entire earnings forecast for 2025. The next trading day, the stock collapsed 38% in a single session, its steepest drop in years, plunging to levels not seen since 2017. Is this just a temporary stumble, or the beginning of a much deeper crisis across the healthcare sector? Some analysts are slashing price targets, while others argue this brutal sell-off could be a rare buying opportunity. The upcoming earnings report on July 25th might hold the answer, and every investor's eyes are on it. Over the past month, Centene's stock has plunged from around 67 talons to under 40, a staggering 43% year-to-date collapse. Compared to rivals like United Health and Molina, Centene has become the worst performer in the S&P 500. Centene still commands massive revenue, over $150 billion last year, and dominates the ACA market. If management's new rate adjustments work, could this freefall set the stage for a dramatic rebound? Centene Corporation, one of the biggest names in US-managed healthcare, just shocked the market. The stock crashed nearly 38% in one day, its worst drop since 2017, and is now down over 43% year-to-date, making it the biggest loser in the S&P 500. That miscalculation blew a hole in their finances, slashing projected earnings by $2.75 per share, a $1.8 billion hit. Centene still brings in enormous revenue, over $150 billion in 2024. And its stock now trades at a low PE ratio of 8.46, compared to an industry average of 12 to 18. While that might look like a bargain, the low valuation signals huge uncertainty about future profits. Estimated DCF value of one CNC stock is $111.82 USD. Compared to the current market price of $27.95 USD, the stock is undervalued by 75%, with estimated fair value range of approximately $112 to $242 per share. July 25th, 2025, when Centene reports Q2 earnings. For now, analysts are split. Some see value, others warn of more downside. This is a high-risk hold until we see proof the company can realign costs and regain investor confidence. Check ultimamen.com for more.